You want to be successful, you want to make money in real estate, here's 3 terms you need to know. It's very important, it's crucial to know these 3 terms. First one up, cap rate, okay? The cap rate is essentially, it's short for capitalization rate. It's a crucial metric that helps you evaluate the return on the property, okay? Simply put, cap rate is calculated by dividing the property's net operating income, or NOI, by the purchase price, okay? And that's how you evaluate what the cap rate's gonna be. You gotta divide it based on what is the purchase price gonna be, okay? Now, you might be asking, what is the NOI? The NOI, simply put, is your net operating income. It's all of your rental income minus all of the operating expenses. So we can take a look at an example real quick. Imagine a property that generates $100,000 in NOI and is valued, or the purchase price of it rather, is $1 million. Then the cap rate would be 10%. This means for every dollar you invest, you're earning 10 cents annually, okay? Higher cap rate indicates a better return, but remember, it can also mean higher risk.
Cash flow. We all love cash flow, right? This is the net amount of money you make from a property after all expenses. Think of it as money left in your pocket after you paid all your bills. It's the gross rental income minus total expenses. So let's look at this. To calculate cash flow, subtract all expenses like mortgage payments, maintenance, which I see a lot of people forget about, taxes and insurance from your gross rental income. Say the property makes $3,000 and your expenses is $2,000. That means your cash flow is $1,000. Positive cash flow is essential because it means your investment is making money, which guess what? We all want to make, right? That's why we're in real estate. Not so good if you're not a positive cash flow. So make sure you understand how to get these numbers to be positive.
Let's break down ROI, or return on investment. It measures the profitability of your investment comparing the net profit to the total amount investment, okay? So another way that you can look at ROI is a cash on cash. So basically it's the total cash flow that Tiffany talked about, okay? Divided by what you're into the property, your total investment. So basically, say you invested $100,000 and you're generating cash flow positive of $10,000, you're gonna be getting an ROI of 10%, okay? Or a cash on cash return of 10%. So obviously, the higher that number, the better the investment. And that's what you're gonna be targeting, is a better cash on cash return, better return on investment of what you're into at total.
You wanna make money? Make sure you understand these things. Cap rate helps you understand potential returns. Cash flow keeps track of all your monthly earnings. And ROI measures overall profitability. Master these terms and you'll be well on your way to be making money in real estate.